Invest in you, ready, set, grow, as part of our partnership with Acorns, the micro investing app.
Martin Cabrera is a member of CNBC's Financial Wellness Advisory Council. He's got an op-ed out today on the retirement crisis in the Latino community. Thanks very much for joining us, Martin.
Thank you, Wilfred and Sarah. It's good to be here.
So Martin, give us the headline from the op-ed, which is available to read on CNBC.com, that this crisis, as you call it, is driven by lower savings rates. Is that right?
I think it's low saving rates overall, but especially in the Hispanic or Latino community. And there you're seeing kind of more individuals having lack of access to some of the investment programs and 401k savings programs. But I think you're starting to see that change over time.
So it's a lack of access to the right type of savings programs as opposed to, say, lack of education for the need to be saving?
I think there's lack of access. Some of the programs aren't offered to lower paid employees, but also kind of the education piece of it. As more individuals and those in the Latino community, as they are getting access to some of the 401k programs, you'll see a 95% participation rate. But some of them don't have access to the 401k programs. But you're starting to see that change over time.
Why not? Why is the access such a problem?
I think because some of them are private sector employees and they are lower service employees and they're not offered by their private sector employers. But I think there's some state-sponsored programs that are encouraging them to save more and to provide for the 401k savings. So you're starting to see that change, but you're also starting to see the growth in just the buying power for the U.S. Latino market, which is about $2.1 trillion. And if you were to look at it as an economy, it'd probably be the 9th largest economy in the world. So you're seeing more folks graduate from high school, but also from associates and bachelor's degrees, and they're coming into the work world with more skilled kind of as employees, but also they have more discretionary dollars. So that is going into some of those 401k savings programs. So there is a positive light at the end of the tunnel.
Martin, are there any small initiatives you've seen in action that you'd like to see rolled out on a bigger scale?
I think there are different states that are taking some initiatives. I know the state treasurer, Mike Farrick, here in Illinois, has secured Choice Illinois, where it's actually allowing some of the private sector employers and employees, kind of allowing them to participate, but it's taking 3% automatic pay out of their checks to be invested in a 401k. So it's going to allow them to kind of have savings once they do retire. It was the first state to pass it. There have been 10 other states. California just passed it last year for California Secured Choice, which is going to be very impactful, not just to kind of those individuals, but also to the markets, domestically and internationally. And then also there are other programs kind of on just financial literacy, as CNBC is doing, but also for the stock market gain programs and education programs for grammar schools and high schools, too.
Martin, thanks for joining us.
Thanks for having me.
And you can read Martin's full piece from the Invest in You part of the website, cnbc.com/invest in you. We should note that NBC Universal and Comcast Ventures are investors in Acorns.